Good day. Ira Epstein of Linn & Associates with your SPDR ETF wrap-up for this Monday, March 1st, 2021, just after 6 p.m. And boy, how time is flying, isn't it amazing? All right, today an update, and folks, what can I say? You had over the weekend the Johnson & Johnson approval for its vaccine, which rolls out tomorrow, actually. First people in America will get it then. You had the Democrats back off the wage hike provision in the COVID relief bill, and you had a removal of the tax consequence that some Democrats were trying to put through on into the bill that would be on corporations. Now, that's not to say that the Democrats aren't going to try to come through with other taxes. I understand Elizabeth Warren's already preparing one for the ultra-rich in America. I don't know what that means. I don't know what the barriers are, what the income levels are. She'll come up with it. It's going to have a heck of a time in the Senate. I don't know what they can get done in the House either. Then, of course, they'll probably go after wealth taxes. If as you pass away, what happens with that? Does that get taxed in a different way? There'll be many things that come up. The important thing is there was enough good today to get the market going. Now, keep in the back of your mind, you have jobs data at the end of the week. You have an OPEC meeting. You've had a lot of economic data happening already. There's going to be more. And on Thursday, we have Fed Chair Powell speaking, I believe. So a big week of things going on. Before I get too far in this, I want to ask you a favor. If you're watching me, if you like it, give it a thumbs up, please. If you have a comment, write it. And if you want to subscribe to this, it's free. Just hit your subscription button on YouTube, and then every time I put them out, you'll get them. I'm sure you realize over the weekend I put out a different version that's all the weekly charts. So in GameStop, you're at a very serious road right here. You're in an uptrend. You're fighting at the upper Bollinger Band each day. Momentum is flattened out on you. Pretty wild chart, if you ask me. Very interesting to look at on it. And I can see it's in an uptrend, but staying over a Bollinger Band only 5% of the time. Is this enough sideways action to say it's acting as a base? I don't think so. So we'll see what happens. And as you know, on this, all you need is one Reddit comment and you're up or down. It goes pretty crazy. AMC did better, and I like the fact that Tom and Jerry, remember we grew up with Tom and Jerry, the cartoons? Well, it came out the movie, and I realize it's at home as well. But at home, like I have Xfinity, I guess it is, and it's included in one of my packages. But in the movie theater outings, it did very well. Does that mean the kids are coming out again? That's where my brain process is going. Because I think that we're already into the process of post-COVID. I realize there's new variants coming out and all, but I follow the market. The market's in a rotation doing that type of betting. I'm not saying this is a runaway stock, but like GameStop, where's it stopping? Right at the Bollinger Bands. Here's a market that, I think that when the infrastructure bills hit in America, it stands to benefit. It's the Global X U.S. Structured Development ETF. Trend is up. You can see how the market's coming up here. You're over the 18-day average with a pattern of higher lows, higher highs, bias up. Resistance, the upper Bollinger Band, and boy, is that market paying great attention to it. So what do I think's happening here? I'll use the word. PT, profit taking. That doesn't mean you can't go higher, but you're not embedded. You're at the upper Bollinger Band. I think the pros are taking money off the table, and I've been a bull in that market. THCX. Right, we've been coming down. This stock was a high flyer up until the end of January, then it gave back literally everything from the first of the year. Where now? Well, if you get over 2179, you negate the downtrend. You're oversold. You have not hit a lower Bollinger Band. Could the market work lower? It could. Is there any reason to be a buyer? There isn't. What if the market closed over 2180? Well, if we come back here, we see that 1950 was this break low. Today we were higher. The break low here was 1899. So if the market gets over 2179, you turn the swing line up, but you need to close over 2247 to get bullish. Okay? I see an oversold market that doesn't act like it wants to go to the lower Bollinger Band. It's running out of downside momentum. In SMH, I see a market that's fighting its battle in these chip stocks, the chip index, if you will, right here at the 18-day average. Take out 250.05 and you get a higher high. Now, if we come back to the low that we made on Friday, that low is 234.92. If we come back here, this low is 232.88. So we have a pattern of higher lows, and what the market needs to get bullish is what? Just taking out 250.05, momentum's turning up. If that occurred, you put into play the possibility of getting to the 258.70 level. You've got a lot of risk, though, from that 250 to 234.92. I would think the traders, if they bought, they'd buy gingerly because of that risk, but it would turn the trend of the market. In XLI, where's the resistance? The Bollinger Band. Right here. So you hit it, you pulled back, and now you're back to it? Nah. It's a sign to me the pros are taking money off the table, not going into it. I know you're going to think I'm wrong on that, and that's fine. The trend is up, the bias is up, but you're very overbought and into that stiff resistance. This market shows it doesn't like to stay over that most of the time. I use the word most of the time. There's no reason to be short, but there's no reason to be long. In XLE, the energy sector, this is a warning sign. I don't like what I just saw there. Here's Friday's action. You were under a 80 reading, right? And you didn't gain it back today. Out, out, out. I think the pros are walking away from the long side here. They'll let the OPEC meeting take place and decide what to do. When you lose the embedded reading, the only time you can get it back is if both numbers get back immediately the next day above 80. You did not do that. So, as I see it, the market's saying that it wants to fail in this area and pull back to wherever that 18-day average comes in. And yes, I think the pros are coming out of the market. In QQQ, the market keeps trying to get down and stay under that lower Bollinger Band, and it flips right back over it each time. Well, what's the reason for that? Well, number one, if you look at the weekly charts while they've broken down, you're not taking the trend apart. That's number one. You can lose phases of an uptrend, nothing wrong with that, but you're being well supported here at that lower band, and if you rallied more, I'd look for resistance 328. What else? You got yourself very oversold and you're trying to correct it. Nothing on this chart is saying it's friendly. You'd have to get over 324.45 to negate the downtrend. That would negate it and put you in play for the 18-day average, but not into an uptrend. So I don't see an awful lot there. In the emerging markets, I see a pattern of a higher high, lower low, and I realize this is the trade everybody is in, was in, and a lot got hurt on it. Because this was where the market went, that was your correction. Now what? You're not trending at this point, you're drifting. In gold, there's no inflation yet. Now, I was concerned today with the manufacturing numbers that came out, the manufacturing index in the U.S. 86, I think, was the reading. The highest it's been in a very, very, very long time. That's a sign that maybe we're getting a shortage of materials, people willing to pay more, bit of inflation coming in there. The market's staying under the lower Bollinger Band. It's riding it. This is now, what, the third day or so in a row of that. Oversold? No, it is not a place to go short. I still think the pros came out on the first challenge of the lower band again. It didn't hit it there. It hit it on Friday, and this is today. You hit it here, you bounce. So far, each good rally's been met with selling. You have not changed this downtrend in the market. If gold's no good, why even thinking of miners in the gold? They're down again, and then the same type of pattern in big trouble. TLT. This is your Treasuries. So you lost the embedded reading. My rule of thumb is this. When you have an embedded reading and you lose it, if you don't gain it back the next day, which you did not, it's generally a sign the market's going to make a run for the 18-day average of closes. So as far as I'm concerned, this is an area to be covering shorts unless you take out 136.61, where then the market failed on that rally and away you go. Some traders will take what I call lost embedded reading. They'll be buying the market in here with stops under that low, looking for wherever that 18-day average comes in. In the euro fell right on back. So this is what I call that the currencies aren't getting any lasting move. They collapsed They found support at the Bollinger Band, spun all the way up, and now they're in a state of collapse again. This is not what you call an easy-to-trade market. It's really caught in the sideways action of the Bollinger Band, which has no trend, supports between here to the 112.48, resistance back at the 18-day average, and you're oversold. I'll let somebody else have a good time with the trade like that. You know, one of the things, if you're watching me here, you might want to get our volumes 1 and 2 of our guide to technical indicators. You know, I talk about the charts, and I use bar charts. A lot of traders use candlestick charts. They want to make it more interesting with the open and how did the market close in relation to it. Tried all that in my career. I'm much happier with the simple. In fact, I'm happy with simple things. And I realized that I've tried all these things over my now 50 some odd career. And when Candlestick came out, you think I didn't go to all these courses. I had to learn the newest thing on the block, and I realized all it does is get me confused. It's got hammers, it's got sickles. You know what I'm getting at. I'm making fun, but I'd rather have a plain old bar chart, and that's me. A lot of traders don't think I'm right on that, and I respect that. If you're interested in getting this, just go to our website. It's under free offers. You can call my staff to work with it. If you like this video, give me a thumbs up. Better yet, even subscribe to it and leave a comment. It'll take you right where you got to be with me. I look at the comments in the morning. I do my best to respond to them if I think that they're worthy of responding. I get some crazy questions, some insulting ones. That's what part of this is if you go on social media. I'm Ira Epstein. You have a great day.